Well, hello everyone. This is Roger Scott from Wealth Press. And what do I always say? Let's get into it right now. So, starting with the outlook. We've got a few things happening overnight. We had a mixed session in Asia as government inched towards letting businesses reopen and central banks step in with more support for the ailing economies. The price for oil, folks, just couldn't stand up. Remember what I was telling you? Don't try to get into a position that looks like a falling knife. And that's what you would get yourself into if you were to trade oil. Don't try to gauge where that knife is going to stop falling. Get in on things that are trending or go in the direction of the trend. So with the central banks and government promising huge amounts of aid, and they have, some investors are focused on potential return of growth as the outbreak levels off in some areas. I got to say, that's not the case here in the U.S. The Federal Reserve is holding its own monetary policy meetings today and Wednesday, though it's not expected to add to the huge amount of stimulus that it has already deployed. Boy, they've given plenty, including another $500 billion just a few days ago for small business loans. Though investors will be keen on looking for more details on the economic outlook. The European Central Bank will hold its own meetings Thursday, and likewise, it's expected to mainly fill in details of its stimulus program or possibly tweak them. A slew of corporate earnings is lined up for this week. This is a big week. Nearly a third of the companies in the S&P are scheduled to report how profitable or otherwise they were in the first 3 months of 2020. That's the first quarter. And more importantly, perhaps talk about how they see future conditions shaking out. That includes Amazon, Apple, Facebook, Microsoft, Google, and Alphabet. Boy, talk about those 5 stocks probably represent about 50% of the market cap in the Nasdaq 100 and about probably 15% of the market cap within the S&P 500. In the energy market, the U.S. oil market extended its loss, dropping $1.39 to $11.39. Can you believe that? That's amazing. That added to a drop of $4.16 a barrel that happened on Monday. Again, we've got an oversupply when storage space for crude is scarce. So again, things are not looking all that pretty with crude oil. Now, today is Tuesday, and Tuesday we talk about the best sector that we think is going to outperform. Now, I've been looking, I don't know if you guys have noticed or not, but I've been looking at the Nasdaq 100 because the Nasdaq 100 has been absolutely killing it. Look at this. It's trading way above the 50-day line. We still haven't had the 50-day and the 200-day cross, and this week we've got all of the big 5 tech earnings. We got Google, Apple, Facebook, Microsoft, and Alphabet. I mean, we got it all. So let's see here. We got Apple, Alphabet. I can't even keep track of this. Facebook, Amazon, and Microsoft. That's the one I missed. I missed Amazon. And again, I think the focus is going to be on tech. Now, recently, if you look at what we're looking at right now is the top 10 sectors or the entire 10 sectors in the S&P 500 broken down into their respective sectors. So we've got healthcare, technology, and consumer discretionary leading. Now, healthcare is doing really, really well right now. And finally, I believe after the economy comes back, we're going to see a lot more focus and a lot more money, especially from the federal government, on healthcare because we don't want this coronavirus. We don't want a part 2 of what we're going through right now in the country or in the world. But this week is all about technology. And if you look at the technology sector, it's just now crossing the 50 and the 200, but price action is well above the 50-day line. And to me, notice that we're higher than the previous high, and that looks a lot like the Nasdaq, as you could see here. But instead of focusing on the Nasdaq, and the Nasdaq has a lot of health, consumer discretionary, and technology, I think I'm going to just focus for the remainder of the week on technology because I think technology, if earnings are slightly better than expected, and remember, these expectations are taking into account everything we already know. So let me first of all give you some of the expectations. I said this yesterday, but I'll give you the expectations again so you know what to expect. But I'm focusing back on technology. I have a feeling technology may lead healthcare by the end of this week or beginning of next week if things play out right. So out of all the stocks, Apple is reporting on Thursday after the close. It's looking to report negative 20% from a year ago. Now remember, these expectations are already priced into the stock. So if the number is negative 15%, the stock will rally. If it's negative 25%, the stock will drop. Everything is based on the estimates. And right now, the expectation that's priced into the market is negative 20.4% from a year ago. Next one is Alphabet. Alphabet is Google. And again, I like the way the stocks are looking right now. They're still trading above the 50-day moving average. They're still trading above the 200-day moving average, especially most of them. If you look at Apple, it looks very similar to the overall technology sector. So let's keep looking at them. So Alphabet reports Tuesday, today after the close, we're looking at negative 9.6%. If the number's better than that, we're going to rally. Now, Amazon is reporting Thursday after the close. Can you imagine how big Friday is going to be if Amazon and Apple both disappoint or if they outperform? I mean, we got both Amazon and Apple reporting Thursday after the close. So far, Amazon is staying near all-time highs, and we're expecting it to drop, the earnings to drop 11.7% from a year ago. And with Alphabet, they're expecting to be negative 9.6%. Now, Facebook, let's take a look at Facebook. Facebook is just barely getting ready to cross that 200-day. I'm not so bullish on Facebook. Facebook's expected to show higher by 14.7%. For something tells me that's not going to happen. I don't know what it is. Maybe people are going on Facebook a lot right now, but I don't think ad costs are up, and I don't think ad revenue is really doing as well because of what we're seeing right now. I think out of all of these five, and watch, I'll get everyone right, I'll get everyone wrong, I'll get it all in a different order. But no, honestly, all jokes aside, I'm expecting Facebook to be the weakest one of all of them. And it's actually the one that's lagging behind price-wise. Microsoft, well above the 200-day line, and 50, we're expecting to report Wednesday. That's tomorrow after the closing bell, and that's looking really good. Out of all of these, the only one I'm not really happy about is Netflix. Now, here's the interesting part. If you look at this sector, the one that I'm looking at, XLK, ticker symbol, and if you look at the constituents, you will see that Microsoft and Apple together have or control about 41% of the entire sector. I don't know what the hell Visa's doing in here. I don't even know what it's doing. But Intel, I don't know what MasterCard's doing this, but I guess this sector is a little more broader. But I do believe we're going to see this sector take over the healthcare sector if the big five, if the Microsoft, Apple, Amazon, Alphabet, and Microsoft, Facebook, Amazon, Alphabet, and Apple can maintain their earnings surprises or beat the expectations. But again, I wanted to point out that if you do look at the XLK sector, 41% of it is Microsoft and Apple, and both are doing really, really, really well. I'm very impressed at how the market's performing right now. So that's what we've got for the next few days, and expect a lot more volatility. Think about this. You've got earnings in the top 5 tech stocks. You've got GDP tomorrow. You've got employment data on Thursday. And Thursday, you've got both Google and Apple reporting after the close. So Friday is going to be something of a day, all right? Expect some volatility. Now, how does the thought of thriving in this turbulent market sound to you? Sounds really good to me, actually. You see, soon you'll be able to access a brand new method to earn weekly commissions from the market that are worth $3,000 or more. I would love to earn $3,000 or more from the market. I'd love to do that. I mean, that would be my definition of thriving. Like I mentioned yesterday, James West is going to reveal the strategy that allows the little guy. This is what's going to give the little guy the unfair advantage to cash in on certain stocks just like the big banks do. That's exciting. That's big. Make sure you tune in Wednesday, 1 p.m. Eastern Time, to learn this extremely simple 2-click trick. That's what it is. It's a 2-click trick that could have handing you thousands of dollars in no time. To traders just like you, all right? Unfair advantage, very simple, don't need a big account, consistent money, weekly commission, 3,000 or more. This sounds really good. I like this. But all you got to do is you got to click the link below or the button at the end of this video, and you got to register. You got to check this out. I'll be there. Craig will be there. James will be there. We're going to have a great time. This is going to be cool. I think even Lance will be there. We're going to have a blast. Don't forget, it's happening Wednesday, 1 p.m. Eastern Time. You're going to miss out unless you follow the link below or the button at the end of this video. So don't miss out, all right? I mean, think about it. Making money in these turbulent times right now, weekly commission of $3,000. I like this. All with 2 clicks. I'm going to be there. This is going to be too cool to miss. Folks, don't miss out, and I'll talk to you later. Have a great day.